Hello, I am here with Gateway Mortgage Lending with Mr. Shane McGahey and Charles Smith, and they have so graciously offered to let me interview them. So if you will just kind of tell me like how long you've been in mortgage lending, and then Charles, you can pick up after.
Okay. I was in real estate for...
You were an agent?
I was for like 12, 13 years, I think.
Okay.
And then about 7 years ago, Steve brought me over here to the mortgage side of things. And so I've been here for 7 years now with Steve.
Wow. Okay, cool.
Yeah, so I spent about 20 years in oil and gas, and as a real estate investor, that's how I got to know Gateway Mortgage. They did all my lending for all my investing properties.
Cool.
And over the course of a couple of years, Steve and I talked, and I ended up in Gateway. So that's been going on for now. We just passed a few years now, so we passed 3-year anniversary.
Wow. So, okay, for someone that, and I think I shared this with Charles earlier, when Michael and I first purchased our home, we just happened to use Gateway Mortgage. So we had the privilege of meeting Steve, but in complete honesty, and I shared this with Charles, I was ignorant when it came to financing and lending and all of that. So can you kind of explain the differences between the loans that there are available to someone that would be just coming off the street, like not knowing anything about, money? Can you kind of just give a brief overview of the different loans that are available?
Yeah. You want to kick us off?
Yeah, I can kick us off. So, I mean, if you want to look at a very, very high level, I would say the two broad categories are government versus not government.
Okay,
so
yeah.
When you think government, think your FHA, your VA, your USDA, and when you think non-government, you're talking conventional. And theoretically, the only difference behind those is that these are government-backed, therefore it allows for some more flexibility in the loan profiles.
Okay.
Higher DTI.
What's DTI?
Debt to income ratio.
Okay.
So we can go on conventional, usually 49%. On FHA, we can go 57%.
Okay.
So you can get a little bit more house or anything like that. On our conventional products, we have some specialty products like a home style product. You can buy houses that need renovation, we've done.
So like if someone they see a house that they want, but it's a lot less, but they know that it's going to need some TLC. Mm-hmm. There's a loan for that?
There is.
Okay.
And so you can come in and make it your own. I mean, you can love the lot and hate the house, and you can make the house
love the lot, hate the house.
And you can come in and make the house know to your style and add walls or add a swimming pool. I mean, it's a great product. We also offer that for the veterans as well. They just came out with the home style product for the veterans, and that's 100% financing, and the veterans can also
they can still qualify for that.
Mm-hmm. Yep.
That's awesome. I didn't know about that one. That's interesting to me because so Michael and I are also investors, so we're into investing. And a lot of those homes are the ones that nobody would want to touch with a 10-foot pole. So, but we see those and we see a lot of potential. I don't see the potential. I don't have that ability. Michael has X-ray Superman vision. But of course, I'm looking at, I love the lot, but I can't stand the house, or, vice versa. So I didn't know that was available. So I learned something new. I know I'm going to learn a lot today. So I'm excited. So if someone were to come in, for example, I recently had a client, they're first-time home buyers. And I kind of went through the step process of, okay, well, what are you looking for? What area are you thinking about going to? Have you talked to a lender? And as soon as I said that, they were like, well, what's a lender? So how does the loan approval process work? And if someone were to come in, what are kind of some simple go-tos that they would need to bring with them?
Yeah, so I always tell everybody, first of all, I think the lending portion of buying a home is one of the most mystical processes, and usually where people get the most fearful, right?
Yeah.
They just don't know anything about it. It's a bunch of numbers. It's obviously a large purchase. So when you think about it, I tell everybody to just kind of set everybody in a comfortable state it's your process, right? That's the first thing you have to remember. You control the process. You control the timeline. You control what you give and what you don't give. But as we talk about the lending process, I tell everybody, remember, I call it the CIA method. It's credit, income, and assets.
Can you repeat that one more time?
CIA. So it's credit, income, and assets.
Okay.
And those are the three things that lenders are looking at to determine approved or not approved. And I would also argue there's a third category. It's not approved, but it's only no for now, right?
Oh, I love that. It's no for now. I've heard that a lot before in my life.
If you're working with a good lender and a good loan officer, the goal is always a loan officer should be looking, if you're not approved, what's the gap, right? What is it going to take to get you approved, and walk you through that. But when you think about credit, that's very simple. We're running your credit report. We're pulling credit scores and lines of credit and looking at your credit history. When you think of income, what is your income? How are you being paid? Are you salary? Are you self-employed? Are you hourly? Do you have overtime? Do you have bonuses or commission? We're analyzing that. And when you get into assets, when you think about assets and lending, forget about the assets where you own things like cars or homes even. Really, we're talking about available cash. So investments, and when you think about things like 401k, what can you get your hands on in that 401k? So we're usually talking about 60% of your 401k and things like that. So we're looking at assets not only from an aspect of what do you have the money to pay for the cash to close, the total cash to close, but also do you have cash reserves? Are you in a position to buy a home and still have money left over?
So I love that you brought that up, that there's several different aspects, because I do have a lot of friends that I've had conversations with, and I've asked them, well, have you considered purchasing a home? And immediately their response is, well, my husband's a shift worker, or I'm self-employed, or, it's just not consistent. And so those things kind of come up. And I like that you said that it was a process and there's several different factors that go into it. Could you touch base on just a little bit, because that was a question that has come up before, in the case where someone is a shift worker or contractor, where the income is just it varies. What are some maybe practical things that they could do if they don't have the available assets right away? What is maybe like a process or something that they can look into starting if they don't have that like right away?
And if you're talking from an income aspect,
Yes.
I think it would be probably, Shane, important to talk about variable income.
Yes. So you could do it as a variable income, and so you take their last 2 years, average it out or add it together, and then divide it by 24, and that'll give you your average income for that. So that's what they call variable income.
Okay.
So a lot of nurses have that, a lot of overtime workers. Especially they get straight paid plus overtime. So that's how we figure their overtime, is take their 2 years and divide it by 24, and then that'll give us.
So you said 2 years. So a process of 2 years, what you've had, like what you're able to bring.
That's correct.
Yeah.
Yeah,
Okay.
when you think bonus, commission, overtime, any fluctuating pay, and when I say fluctuating pay, take an individual that works 38 hours a week, then 42, then 37. That's what we call variable pay. So you trigger into a 2-year average at that point.
Yeah. Okay. Thank you for bringing that up, and thank you for clarifying. Okay. So I don't want to get into like the interest rate and all that stuff, but I do want to talk a little bit about the difference between an adjustable rate and a fixed rate. Could you guys cover that briefly?
You want me to take that? Yeah. So if you can imagine, fixed rate mortgage is whether you're in a 15, 20, 25, or 30-year mortgage, your interest rate remains the same through the life of the loan. That is a fixed rate mortgage.
Okay.
An adjustable rate mortgage means simply that it can adjust throughout. And when you think about adjustable rate mortgages, there's a ton of different options. Sometimes
Really?
Oh yes.
Wow.
So
Okay.
sometimes there is a 5-year fixed on the front end, or a 3-year fixed on the front end, meaning that you're fixed during a certain amount of time, and then every year thereafter it goes up and down.
Okay.
It can go up and down every 6 months. So these are things that are stated on the front end of adjustable rate mortgage. So questions would be, do I have a fixed rate for a portion of time? How often can it adjust after the fixed rate? And how much can it adjust?
Yeah.
So sometimes it'll say, hey, there's a 0.5% max, like it can only go up or down 0.5%. Sometimes it's a 1% max. So it's very important to know that.
Let's see. When I heard like adjustable, I thought just immediately going in, you just never know. It's very variable. And of course, someone that's ignorant, it's like, why on earth would you choose that if you don't know that? But like I said, that's someone coming off the streets that did not do the studying, that did not do all of those things like my husband did. So, but now I'm here to learn. Okay. So I said I wasn't going to bring up the rates, but for someone that is scared because of the market, as a lender, just being transparent, what is something that you could encourage people to think of? Because when I talked to the goats at Great American Realty, they said they remembered a time where interest rates were like 12, 14%, and they just refinanced the house, and it wasn't that big of a deal. So they're saying you guys are struggling with 7 and 8% interest rates, and you don't want to buy a house. So how could you comfort that?
Well, you marry the house and you date the rate. So once
Say that again. That was real catchy.
You marry the house and you date the rate.
Okay.
So once if you find that house you love, go ahead and buy it, purchase it, and then you can always refinance that. And once those rates drop, and get that payment a little bit more comfortable where you want it to be. But that house may be a once in a lifetime opportunity that came up that you want to go ahead and
especially if you can get it to the right price, especially if you can negotiate it. Yeah. Which is my job.
And I would also say we're in this interesting time where people I'll use the word spoiled with 3% interest rates, and we have to remember there were record after record up to 16 record rate lows over the course of a couple years that got us in the 2s and 3s. And we will most likely never see that again in our lifetime, right? And a good, strong economy sits us in the 5s and 6s, right? We're still, if you look at the course of history and interest rates, we're still
pretty low. I mean, after what they said, I literally, my mouth dropped, was like, did you say 14? And they're like, oh yes. We just refinanced the house. And I'm like, okay, well, 6 and 7 isn't anything. Okay, but.
And before the 2s and 3s, we were always in the 4.5s to 6.5s, just depending on what year and what the market was doing. But that was the norm. So like Chuck said, everybody got used to seeing the 3s and everything, and talking to their friends, and like, well, they got 3.2 on theirs. Why are we at 6.5? So it's just a different time. It's still a healthy market. It's just everybody just has to get on board with.
Well, and to be completely honest, I think a lot too. A lot of it's fear. I think a lot of it's just fear driven, just because they don't know what they don't know. And they hear people saying, oh, it's just so high. I wouldn't go buy a house right now. And I think, honestly, people just get caught up with the hearsay, I guess is what you could call it. And just being able to come talk to you guys about that, to clarify exactly what they're looking at in the long term and see real numbers. I think that would bring a lot of comfort. Okay, this one's fun. Can you explain the concept? Why is it important to be pre-approved or the pre-approval, and why it's important for a home buyer?
Yeah, so the best story that I have was a veteran client that I had prior to getting pre-approved, went and looked at a home, got super excited about a home, wanted to make an offer, so they rushed through the pre-approval process only to find out they weren't pre-approved.
Oh.
And
how did you take that as the lender?
That's upsetting,
that's
right?
the hardest part.
And it's hard, especially when you see the woman in tears, right? Like, she's super upset, was super excited. Now, ultimately, we got him in a home, we got him closed. But here's what I tell people: there are things that come up as surprises. So the sooner you get paired up with a lender, the sooner you walk through everything and confirm, and you uncover if there are any unknowns, the better off you are.
Yeah.
So even if you're looking and going, hey, it's going to be 6 months before I'm going to buy a house, start looking now. You'd be amazed how many things can be fixed in 6 months if there's some slight, just things you weren't expecting, maybe a credit collection. Medical's very common, right? We go to the hospital, we have 15, 20 different people see us, and a medical collection slips.
Yeah.
Right? And it was totally unexpected. You have no idea it's sitting on your credit report until I run it, right?
Yeah.
So those are things that can be addressed, can be fixed. So the sooner the better, I would say.
Good. That's really good. That's very, very good advice. How long what is average, how long does the lending, what trends have you observed recently in the market, as far as whenever people are wanting to get a house? What are the trends that you're starting to see in people getting, especially now with the interest rates? What is average market, what they're looking at?
The average market,
okay, so the question says, how does the local housing market affect mortgage lending, and what trends have you observed?
So I noticed a lot more sellers doing seller concessions on the deals to make them work. Or we do the 1.0 buy down, and
What's that?
So the sellers are offering to do a 1.0 buy down, which is the first year. Say 7% flat. The first year will be 6% flat. Then the next year will be 7, and then it's 7 throughout the rest of the 30-year term. So a lot of sellers are offering that, and I think that's helping. I see a trend on that, and
Where the seller offers to do that, and it's called the seller.
it's called a 1.0 buy down.
Okay, 1.0 buy down. Okay.
And it just basically goes into the concessions, but we use it for that product.
Okay.
I see that more and more, and we also offer the 2-1 buy down, which they could get to start at 5% and 6% and then 7% through the 3
Now,
years.
the buy downs, are you talking about the points?
It's different than the discount points.
Okay.
This is a true rate reduction buy down. So
Okay.
what the money does, it goes into an escrow holdback product, and every year every month the mortgage company grabs money out of that escrow
Right.
to make them whole, and so it offsets that
reduced payment.
that reduced payment. And then if they ever refi or anything before their term's up, then that money goes towards their principal. So it's not
wow.
lost. Like a discount point, if you pay a discount point and you refinance, that money's gone. You've used that money up. But if you do this program, it can go towards the principal if you refi before the term's up on the program.
Okay, you mentioned a term that I was scared of until I went to real estate school. But I've also mentioned it to, I can think in my head, 3 people in particular. The word escrow. I don't know why that's a mystical word to some people, but could you explain in layman's terms what is escrow?
So escrow is used actually in a ton of different ways. So
Maybe that's
let
why.
me confuse you
Maybe
even more.
that's why.
So when you think title company, we call the person that's doing the actual closing the escrow officer. So that's used there. So that one's a very generic. But when we talk about escrow and lending, the primary function of escrow is a portion of your payment is used for taxes and insurance. And that's basically 1/12 of your taxes and 1/12 of your insurance covering the annual premiums is stuck in a holding account. Now, this is an account that a lender sets up for you. They can't charge you for that. It's just sitting there. And if you could imagine, it's like a savings account, right?
Okay.
And it's building throughout the year. So when your taxes come out and they need to be paid, the lender pays for those out of that account. And the same thing on the anniversary of your homeownership. When you bought your home, when your insurance premiums come out, that is also paid with that account. So
Cool.
It's just a mechanism to gather money throughout the year to build up an account where that stuff's paid for.
But it's already there.
Yeah.
Like you said, it's kind of, I like that you said it's like a savings account.
It is.
I don't think I've ever heard that. That makes sense to me. That's a connection. Bless the Lord. Okay. This one's fun. And you had kind of brought it up just a little. The special loan programs or incentives available for first-time home buyers or specific demographics in the community. And you had brought up the one about when there's like operators that have, the flexible income.
Variable.
Yes. Can you kind of explain some of those? Any special incentives or programs for first-time home buyers?
We got the T-Shack program, the T-DAC, and so what those are down payment assistance programs that gives you, there's different tiers in it at different levels of rate, and it goes up to 5%, and then so you can get up to 5% down payment assistance to go towards your down payment plus closing, and then you cannot refi or sell the home within 3 years. If you do, you do have to pay the down payment assistance back. So you have 3 years and basically 1 day, and then you can refi, and that down payment assistance program is forgiven.
Okay.
And the T-DAC and T-Shack are similar products, so they kind of run off the same deal there. And then again, the 1.0 buy down programs as well.
I liked that one. That one
Chuck, do
sounded
you
cool.
have anything else?
Well,
on
and
that?
I think it's important for people to hear how does Fannie Mae and Freddie Mac, basically the entities that set our federal regulations, how do they define first-time home buyer? And that's not owning a home in the last 3 years. And essentially what happens when you are a first-time home buyer is it allows on a conventional product for you to go to a lower down payment, to the 3%. So that's one of the things that comes from Fannie and Freddie that says, hey, we'll let you go down to 3% down on a conventional product if you're a first-time home buyer. So that's one of the things. And then you have bolt-on programs like grants
Right.
that you can use as
Yeah,
well.
right. Go ahead.
I was saying you could even stack the T-Shack onto a VA. We
Okay.
had a agent call us the other day, and she didn't realize you could do that. So you can get 100% financing for that veteran and stack it, the down payment assistance on top of that, where they essentially don't have to come out with any money out of their pocket.
Wow. Okay. And I mean, but it doesn't always qualify for all, I mean, for all loans. It's certain ones that
That's
you
right.
can stack them.
Yes, ma'am. Mhm.
Okay. There's one that's special to our area that I'm learning about it, but the USDA, and it's only because of like, we're, I guess, in some of the surrounding cities like Angleton, Danbury, Brazoria, it's considered like more rural where that would qualify for that. Can you guys give a little bit of detail into what USDA is or?
Yeah, I think the important thing is USDA was essentially created for these rural developments to promote home ownership in those areas. And USDA is very address specific. So you take, let's take for instance Freeport. There are USDA areas and there's not. And that's so the thing that I always recommend to anybody is make sure you can go on the USDA website, plug in the address, and it'll say eligible or not.
Cool.
For
Okay.
USDA. But that is essentially a zero down product. It is very similar to like a VA has a very similar feel to it, but it's available if it's in that address. Now there's some guidelines that come with that around debt to incomes and things like that.
Yeah.
But yes.
I mean, the only reason why, because Steve was the one that had talked to me about it. He was like, look into USDA loans, especially for our area. Especially like for me being a new agent or newer. I can't say new anymore. Being an agent, recent. He said it would behoove you to go look into USDA. So when I actually went to the website, you can look and it'll show you like a little area map of where it qualifies. But just like you called him Chuck, I said Charles.
I respond. That's okay. It's okay.
Everybody has their own nickname.
Yeah, I mean, so what I prefer Charles. So what Charles said was it is very area specific. So I like that you brought that up. That just because it kind of shows that, but it needs to be the address that you're looking for, the property where it would be.
Yeah,
if you're interested in that.
And it used to be that Angleton was a USDA area, but you can see what has happened to the population in Angleton. It's grown, right?
It's changed, yeah.
And so USDA is based on population. So once you break a certain population, now it's no longer USDA. So that's how they figure that.
Yeah, that is very true. So because we were actually looking into moving into some property. So, but yeah, that's good. Okay, I have one more question. Someone that comes in with below, what is the magic number? 520?
580.
Wow. Okay, someone that comes in below 580. What are some? I'm talking credit score. How can home buyers improve their credit score to qualify for better loan terms? And I think that's very variable depending on their situation.
Sure.
Okay, so let's say the most generic, because really, ultimately, the best people to come talk to is them personally because every story is different. But if I'm a working citizen, I have 2 kids, average family, which, yeah. Working citizen, I'm just trying to pay off credit card debt. I've got some, like a car loan or whatever. My credit score is not that great, but I really want to get out of the apartment. What can I start doing?
So the first thing we do is we need to look at your credit lines, your revolving credit, your credit cards, and see where you're at in that limit. And so you want to be 30% or below on that limit line of the max credit there. That's the first thing we usually look at. If they're young and they don't have any credit, we always tell them like.
Can you say that again, please? Because guess who didn't have any credit? Because Daddy took care of everything. Can you say that again?
If they're young and you haven't
Like how
established
young?
credit, I mean.
Like 18?
18, yeah. I mean, that's
Okay, so to my 18 to like my young adults, okay? Anyone 18 below 30, if you don't have a credit card or a line of credit, you need to get one. Like recommend maybe like a gas card or something.
A gas card. I know my parents when I turned 18, they did a secure, what's it called, a secure credit card, and it had like $300 on it, and that's where my monthly allowance went to basically, and I used that, and it would it reported to the credit bureaus on that. So my mom was establishing my credit.
Smart mom. Not that my dad wasn't, but I did not. He was like, no, I'm not giving my 18-year-old daughter a credit card.
And
It was a $300.
Yeah, and it was secure. Yeah, exactly.
Well, and I love that. I mean, I don't even think parents know that with kids that are going into college, like younger. I mean, I say younger, like parents that are maybe in their early 50s, maybe like late 40s. They have kids that are going to college that, like me, they've taken care of everything and they don't have any credit. So they come to the lender, and, you know, your spouse has like beautiful credit because their parents did, you know, line them up. And me, it's like I have zero credit, which is just as bad as.
Yes, unfortunately it is.
Yeah.
But there are things too, I want to encourage young people. I don't know, this is obviously situation dependent.
Right.
But if you have people in your life that can add you as an authorized user, that becomes your credit too. So for instance, mom has a Chase credit card. She uses it for everything and pays it off every month. She's very diligent with it. They can add the son or daughter as an authorized user, not even give them the information for the credit card.
Yeah.
But that becomes part of their credit report and starts building.
But it says that you're on there, but you're not actually using the credit card. That's brilliant.
It's awesome.
Yeah. And then once they qualify to that point, we can always take them back off, so they're not that debt won't be counted.
In case mom in case we miss some payments or whatever, it doesn't like take their credit back or
That's right.
lower. Mm-hmm. Okay. Yeah, that was something that I wish, and like I said, I think it was just a matter of the era that he grew up in. You never ever want to buy anything on credit. If you don't have the cash in your pocket, you have no business looking at it or buying it. But unfortunately, to build credit, you have to have some credit. So that's a really good point. Let me think. Okay, last question, I promise. Are there any common misconceptions about obtaining a mortgage that that you've seen? Any common misconceptions about it? You guys are not the bad guys.
We're here to help.
You guys are not the bad guys.
Yeah, I mean, I think unfortunately, I would say in probably every market, every industry, right, there are some people that give lenders, I mean, just go on and on and on, right, in every industry, give people a bad name. So I think for the most part, especially I can speak for our area specifically because it's the area in which I live, we have good people across all lenders that want to put people in homes, right? We have a desire to put people in homes. I think the misconception is that you should feel pressured. Like, there's no pressure. I tell everybody, every first time home buyer that walks in my office, I remind them over and over and over, this is your process. You can not apply. We can have a discussion. You can apply and then we have a discussion. We can have a discussion and you apply 6 months later. So they need to know that they own the process, right? Both with the realtor and the lender, right? At the end of the day.
Absolutely.
And I think don't go through a whole buying scenario and have questions and be scared to ask. So I like to bring, if you come in my office, there's a whiteboard. And every home buyer that comes in gets a 45-minute training.
Which, by the way, he is going to do that for another episode of this. He's offered, so I'm going to hold him to it. It's recorded. But I mean, I would love to see that. So I will have a first-time home buyer training for anyone that's interested. Be looking for that episode, but please continue.
But sometimes we forget the simple things because if you've been in it a long time or you've bought multiple homes, some people don't know what principal, interest, taxes, insurance are. Mm-hmm. They don't understand how HOA affects. They don't understand escrow, right? Mm-hmm. They don't understand cash to close, and they think from a down payment mindset, and they're out mathematically figuring down payments, thinking that's all they're going to have to bring to the table. They don't know closing and title policies and things like that. So I think walking people through that and just getting that education allows them to make very educated decisions, number one, and be very comfortable with the process.
Absolutely. For me, it would, like I said, if it wasn't for Michael, who had been doing this, very financial savvy, if it wasn't for my husband, I wouldn't have known the first thing. I don't even know if I would have known to go to a lender. Like I said, I was so, to my parents' credit, I was so well taken care of, and I never had to worry about anything. But this is something that I don't want people to walk away ignorant from, because this is really important. It's special. And so for me, that speaks volumes to what matters. So. Right.
And I think that's one of the key benefits of using a local lender and a local realtor is we're right here down the road, and we'll bring you in and we can sit down and look at the computer screens together, show you line by line. If you need to drop a document off, you can just run by. I think that's why it's so strong to use your local people. And
versus like when you say local, there's literally tons. There's hundreds, probably thousands of lenders that are out and about But I mean, just investing in or trusting in a homegrown community lender.
Yeah, I mean, as long as any lender, as long as it's local, I mean, I'm supportive. I mean, I try to spend everything local.
Right.
I mean, we pass each other in the grocery store.
See each other at coffee shops all the time.
Yeah, so
I will attest to that because I've seen it happen. I'm not mad at you, Shane. But with Charles, I mean, I go to a local coffee shop here in town, and I'm assuming that you're just meeting with clients,
realtors.
right?
Yeah. So I am a big face-to-face person.
Yeah.
I'm almost to the point where I won't lend to a first-time home buyer, and nor the complexity of a construction loan while I do a construction loan without you sitting across from me.
Nice.
I think we've got to get away from the electronic age in this specific situation just because of the complexity of it, right?
Right.
And how big of a decision it is. And I'm amazed at how many people go through the process
Through a computer.
and they still don't even understand what they signed. And so I think it's very, very important. I think real estate's beautiful. I think it's a great way to start building wealth at even a young age. And I think we're in a good position to do that right now. I just want people to do it in an educated way. So me interacting with people and sitting down with people and educating people and connecting with people, and not to mention your realtor and your lender being connected. If you got a buyer that is greatly connected to both the lender and the realtor, and the lender and the realtor are connected, that is a beautiful process.
Yeah, I mean, and I will say, I have a client that I've brought with Charles, and it's a process. We're in the process. But I mean, all it took was a text to Charles, and he was like, "Yep, just come right in," and a phone call. I mean, and we got them within a day or two of having that first initial conversation. So, and I mean, that's just speaking to Gateway Mortgage. And like I said, we used them for our first time home loan. And Steve, as patient as he was, like I said, I was ignorant. But I didn't know what questions to ask. But the fact that we would come in, I don't know how often we came in, but Steve was just so patient and willing to walk through the questions and the process of it. So, I'm very thankful for that. And anybody that's intimidated by the word lender or bank, these are the guys. These are the guys behind the big word lender and mortgage company. So you were saying something and I cut you off.
No, it's okay. I was just gonna say too that I mean that's what we're here for, is the questions. I mean, I tell people there is no ridiculous question because I mean I've heard them all, and I will be happy to answer all of them. I enjoy educating the people and the process, and when they're finished doing a loan with us, they are 100% comfortable and they know what's going on.
Yeah.
I feel like that they're way more educated than when they came in, especially first-time home buyers. But I have a gentleman that he calls me every day and has a question, and so I'm totally fine with it. I'm happy to answer them, and that's what I mean. We are here to help you through the process to make it as easy as possible to get you to the finish line.
So you're not just number guys, you're people guys. That's awesome.
And I'll tell you, one of my favorite topics, aside from first-time home buyers, is investors.
Oh, yay, I'm here.
When you start to step into the arena of now I've owned my own home and now I'm considering an investment home, you want to see me get really passionate, come sit down with me. I think there's enough investment opportunities out there for all investors, number one. And number two, I always say that the investor market and everybody that are investors is such a beautiful market because people are willing to pour into other people if you want to be an investor. And so I the same. So come sit down with me if you're interested in just talking investments, how you do that, how you go about that, how you leverage money, and how you move money around to make deals happen.
That's awesome. Well, guys, I've learned a lot today. Y'all are just cool. They're so cool. Y'all are so cool. So Shane and Charles from Gateway Mortgage. And like I said, Charles will be doing a first-time home buyer training with me soon. Whenever. Soon. Jesus said that word all the time on The Chosen. He's like, soon is such an ambiguous word, but soon. So just be looking for that episode. And I really appreciate you guys giving up your time and just willing to answer the weird questions. Thank y'all.
Thank you.
Thank you.